Dear students, I'll introduce computerized accounting to you today. Introduction to computerized accounting. As you know, accounting is the method in which financial information is gathered, processed, and summarized into financial statements and reports. Proper accounting of business transactions is inevitable for proper management of the business. There are manual and computerized systems of accounting. I think you know the definition of accounting. American Institute of Certified Public Accounts defines accounting is the art and science of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character and in interpreting the results thereof. Manual versus computerized accounting. Manual and computerized accounting follows the same principles and rules. Manual accounting using pen and paper for recording transactions. But in computerized accounting, the accountants are using machines or various types of computers and aided devices for recording of transactions. But the rules are same. Nowadays, computers and accounting programs have become very affordable and easy to use. So, making computerized accounting a popular choice for many firms, including small businesses. Then we can compare manual and computerized accounting. First one, speed. An obvious difference between manual and computerized accounting is speed. Accounting softwares can process transactions and compile reports at a high speed that cannot be matched by a manual system. If you want to compile a report in accounting software, you literally press a button and get it immediately to you. To do the same in manual systems, you will have to wait for someone to manually calculate numbers and put them in a professional format, and this may take hours or even days. Second, accuracy. Computerized accounting is more accurate than manual because most of the calculations are performed by the program or software. For example, you could use software to do your billing, and that software will calculate any sale taxes, subtotals, and other items automatically, minimizing the risk of mistakes such as transposition of numbers, etc. If a mistake is made in a computerized system, you can run reports to pinpoint the errors and correct it. Reports can be processed right away with corrected information. In a manual system, a mistake is much harder to find with an accountant reviewing many pages full of numbers. Once corrected, reports cannot be processed immediately. It takes time. Third, organization. Data processed through software is organized and easy to find. Thus, not the case with manual systems, where you may have to review several pages to find what you need. Accounting programs organize the information in one place, classified by type. For instance, if you want to find certain data about a vendor, you can go to the accounts payable section of the software, usually by clicking a link or tab, and conduct a search for the vendor. If you conduct the same process on a manual system, you may have to go through several pages and take your time to find what you are looking for. 4. Cost or expenses. Cost or expenses for a computerized system are higher than that of a manual system. Pencil, paper, and calculator cost less than computerized accounting. Computers and peripherals such as printers use electricity, so expect a jump in your utilities bill. If you select an online accounting program, then you will pay internet access fees as well. So, computerized accounting is costlier than that of a manual accounting system. Then we can look into the fifth point, safety. Accounting records kept on the manual system can be lost or damaged easily. On the other hand, records kept by a computer are likely to be safer because many systems are backed up oftenly. If you lose pages in a paper pad, you may have to recreate the transactions by conducting research and writing them in again. In a computerized system, you simply restore the latest backup and add a few transactions that were not saved. In this area, accounting software is obviously superior to manual systems. Next point, legibility. The switch to computerized accounting from manual accounting has a very fundamental advantage, that is, legibility. Manual accounting typically is performed by hand, in pen, and in a ledger. If a writer has bad handwriting, it may be difficult to read the entries in the ledger at a later date. This is not a concern with the computerized accounting, as every entry looks exactly the same on a computer screen or a paper printout, regardless of who entered it into the computer software. 7. Physical space. As you know, physical space is another advantage of computerized accounting. When accountants eventually fill manual accounting ledgers, the ledgers require replacements. After a few years and ledger replacements, the ledgers will require more physical space for storage, and the requirement increases with every new ledger. In the case of the computer used for accounting will remain the same physical size regardless of the number of accounting entries. 8. Simplicity of calculations. The simplicity of calculations in computerized accounting is perhaps the most important advantage over manual accounting. With computerized accounting, reports detailing spending habits over a given period of time can be generated almost effortlessly with the computer software performing the long calculations. In manual accounting, however, obtaining similar information is significantly more time consuming because the user must add up each entry by calculator. If the ledger has a large number of entries, or if there are multiple ledgers, looking through the information and adding up potentially hundreds of entries could take hours to hours. 9. Ease of making changes. The ease of making changes in computerized accounting when compared to manual accounting is a significant advantage. If the bookkeeper notices an error, for example, it would require only a few clicks of the mouse to correct it with the computerized accounting software. With manual accounting, however, it would be significantly more difficult to change because the original entry is written in pen and an incorrect figure may affect multiple entries. 10th point, financial statements. In a manual accounting system, you have to prepare your company's income statement, balance sheet, and statement of owner's equity by hand. Information from your journal entries helps to formulate your company's financial statements. In computerized accounting, the software allows financial statements to be created from information stored in a database. Then, 11th point, reports. Reports are created in a timely manner when using a computerized accounting system. Reports generated from computerized accounting software allow managers to run the company in a more efficient manner. Creating reports in the manual accounting system may lead to more staff frustration and result in having to work with the outdated information. This is an introduction to computerized accounting. Write the notes and study well. Thank you.